Imagine losing $1.3 billion in just one day. But it wasn't due to a product recall, a lawsuit, or even a financial crisis. No, it was because of a tweet. That's precisely what happened to Snap Inc., Snapchat's parent company, when pop star Kylie Jenner tweeted, "So does anyone else not open Snapchat anymore? Or is it just me? Ugh, this is so sad." Just 18 words. And Snap's market value dropped by over 8%, wiping out $1.8 billion out of its market cap. This isn't merely a celebrity mishap. It offers a glimpse into a new kind of economic vulnerability, where 240 characters can shake Wall Street, trigger mass sell-offs, or even crush a business's future. Welcome to the Mechanics of Money, where we make sense of the most intriguing money questions. In today's episode, we explore how a single tweet can destroy a company. We'll dissect the psychology of digital influence, the real-time reactions of algorithms in stock markets, and why reputation risk is now more volatile than ever. From Elon Musk to anonymous whistleblowers, we'll reveal how companies have risen and fallen on the back of a few words, and why tweets have become financial weapons. Let's begin with the fundamentals. Tweets are brief, public messages. They seem small, yet they can carry enormous financial consequences, especially when they originate from high-profile individuals. In today's economy, public trust is a form of currency, and platforms like X function as real-time rating agencies for reputation. Investors, customers, and algorithms all take notice. So when a tweet criticizes a company, markets listen. Think of it like a domino effect. A tweet criticizes a company. It goes viral. Public sentiment shifts. Investors get spooked. Stock prices fall. News outlets amplify the story. The cycle reinforces itself. Economists call this reflexivity, the idea that perception shapes reality. Remember Kylie Jenner's tweet from February 2018? At that time, Snapchat had just released a controversial redesign. Users disliked it. The app became more difficult to navigate, and public opinion quickly soured. Then Kylie, with over 100 million followers on social media, weighed in. Within 24 hours, Snap Inc. lost $1.3 billion in market cap. By the week's end, it was $1.5 billion. Analysts downgraded the stock. Media headlines screamed about the Snapchat crisis, all from one tweet. Why was the reaction so extreme? Because Kylie Jenner personified Snapchat's core audience, Generation Z. Her disapproval indicated that the platform was losing its cultural relevance, a crucial aspect for social media companies. To investors, this meant if Snapchat wasn't cool anymore, it wasn't valuable anymore. Here's the twist. Algorithms made this worse. Institutional investors utilize quantitative trading bots that respond to social media signals. These bots scan platforms for mentions, sentiment, and trends. When Kylie's tweet went viral, sentiment scanning algorithms flagged it as a negative catalyst. That triggered automated sell-offs, further dropping Snap's price. Then, media outlets reported the stock crash, reinforcing the negative feedback loop. So it wasn't just Kylie's words, it was the system's reaction to them. Let's discuss someone who's always in the news, Elon Musk. In 2018, Elon Musk tweeted, "I'm considering taking Tesla private at $420, funding secured." Tesla's stock surged. Investors scrambled to grasp the meaning. Did Musk truly have the billions needed? Could this actually occur? The claim was misleading. The SEC launched an investigation. Tesla's stock became a roller coaster. In the following weeks, Tesla lost $10 billion in market value. Musk was fined $20 million. Tesla paid a separate $20 million fine. Musk was compelled to step down as chairman for 3 years. Once more, one tweet set off a cascade of legal, financial, and reputational consequences. This situation differed from Kylie's. Here, the tweet came directly from the CEO, raising serious issues about corporate governance, transparency, and investor trust. The lesson here? Even a positive-sounding tweet can be destructive if it's perceived as reckless or false. At this juncture, you might wonder, why do tweets possess this much power? 3 reasons. Speed. Tweets are instant and public. Unlike press releases or interviews, there's no filter or delay. Credibility. When a tweet originates from someone influential, like a CEO, celebrity, or insider, it holds significant weight. Visibility. Platforms like X propel viral tweets to millions within minutes. The information spreads faster than any traditional news outlet. Combine this with real-time trading, news-scraping bots, and retail investor reactions, and you create a perfect storm. In fact, some hedge funds now utilize natural language processing tools to monitor social media and adjust trades within milliseconds. When words move billions, every second counts. Let's examine short sellers, individuals who profit when a stock price falls. In 2021, Citron Research, a prominent short seller, tweeted that Gamestop was going back to $20 fast. The tweet was part of a broader attack on the company's fundamentals. Reddit's Wall Street Bets community interpreted it differently. They initiated a massive short squeeze, buying shares to drive the price up and punish short sellers like Citron. In a stunning reversal, GameStop soared from $20 to nearly $500. Citron incurred massive losses. They subsequently announced they would halt publishing short reports altogether. In this instance, a tweet triggered triggered a counterattack, revealing how social media can backfire on those attempting to manipulate perception. So what do these examples teach us? Companies today confront a new form of financial risk: reputation volatility. It may not appear on the balance sheet, but it can cost more than any supply chain disruption or legal dispute. A negative review can go viral. A whistleblower can tweet screenshots. A frustrated celebrity can obliterate your brand. Even misinformation can crash your stock before facts are verified. And once the damage is done, it's difficult to reverse. This is why some companies employ social listening teams dedicated to monitoring platforms in real time. Others invest in online sentiment analytics, attempting to foresee PR disasters before they spiral out of control. In this new environment, a company's stock price is no longer solely about performance. It's about perception. But what happens when a tweet crosses the line? Governments and regulators are racing to catch up. Yet we've observed legal repercussions play out. In 2020, biotech firm Eastman Kodak saw its stock skyrocket by 2,500% following a tweet hinting at a $765 million government loan. The deal eventually fell through amid insider trading allegations. In 2022, Elon Musk faced scrutiny once again when he polled Twitter about selling 10% of his Tesla shares. The stock dropped. The SEC watched closely. The line between personal expression and market manipulation is becoming increasingly blurry. In the eyes of the law, intent matters, but proving that on social media, it's complicated. So, how can companies protect themselves? Proactive monitoring. Employ AI to track social sentiment in real time. Strong crisis communication. Have a rapid response plan for viral negativity. Executive media training. Leaders must comprehend the weight of their words. Investor education. Ensure your shareholder base comprehends the fundamentals, not merely the headlines. However, ultimately, the best defense is building trust, because companies that possess goodwill and credibility are more likely to withstand the tweet storm. In 2023, a fabricated tweet generated by AI claimed an explosion had struck the Pentagon. Within moments, U.S. stock markets dipped. The image was later proven fake, but it was too late. Billions briefly vanished in value, all because of one viral post. This is the reality we now inhabit, where a single message, real or fake, posted by a human or AI, can shake global markets. The tools of influence are democratized, and anyone with a following can shape financial outcomes. That's both exhilarating and petrifying, because the next tweet that destroys a company, it might already be drafted. Thanks for joining us on the mechanics of money. If this topic resonated with you, please share your thoughts or questions in the comments below. Until next time.